Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Donald Trump, Kamala Harris clash in their first ever debate, with Harris securing a surprise endorsement from Taylor Swift. The presidential showdown dominated by the economy, abortion rights, immigration and the January 6th riots.
I had nothing to do with that other than they asked me to make a speech. I showed up for a speech. I said, I think it's going to be big.
The President of the United States incited a violent mob.
US and European futures pointing lower this morning as traders weigh the presidential debate and growth concerns ahead of a US CPI report due later today. Plus, JPMorgan shares tumble after it pushes back on earnings optimism, while rival Bank of America warns of weak investment banking performance. We will bring you the latest from a nervous banking sector. So the US election and that debate soaring to the top of the agenda for traders, but still working out how to play what we've been seeing in terms of that head-to-head between Kamala Harris and, of course, former President Donald Trump. We've seen some moves in Bitcoin and we'll unpack that for you. But broadly across the markets, a bit of a more muted response than maybe some had expected. The focus yesterday on the banking sector and tech, an upgrade coming through from Tesla. That was one of the best performing companies yesterday. JPMorgan, as we say, falling around 5%. US markets, though, closed higher. Nasdaq 100 gained around 0.9%. The S&P was also up by around 0.4%. The picture, though, now, as you look at the futures, looking a little bit more muted ahead of that key inflation story, of course, that will unfold in the US later. European futures then pointing lower by 0.2%. The FTSE 100 here in the UK pointing lower by 16 points. Oil will be a factor there. S&P futures down by 0.5%. And Nasdaq futures, after the gains of yesterday, pointing lower by 130 points. Let's flip the board then and look cross-asset. You had a very successful sale of 3-year Treasury notes yesterday, well absorbed by the markets, around $58 billion. We have a 10-year auction later today, so monitor that. But expectations, it seems, of course, that the Fed will be cutting in September, on September the 18th, helping in terms of the auctions coming through, at least on the 3-year level. The 2-year at the front end of that curve, 356, yields down 2 basis points. The inflation number expected to come down to 2.5% in terms of CPI on a headline basis year on year later today. The Japanese yen soaring in the session, 141, up almost a full percentage point. A little bit of softness around the dollar, but this is mostly around BOJ officials suggesting that further hikes are coming. That meeting from the BOJ towards the end of next week, Friday. Brent below $70 a barrel for the first time in 2 years, 69.57, up in the session, 0.5%. Bitcoin moving then, and this is the asset that's been most sensitive to this debate, expected, of course, to benefit should Trump win in November. Softer today on views from some in the markets that Kamala Harris claims victory in that debate. 56,475 right now on the largest cryptocurrency, down a full 2 percentage points. Now, Kamala Harris and Donald Trump have sparred then through their first presidential debate, with the former president often on the defensive over abortion rights, the January 6th insurrection and foreign policy. The initial exchanges focused on the economy and immigration, with Trump attacking Harris on inflation and a porous border, warning that migrants will overrun towns across the US. Harris said the Democrats had inherited a damaged economy from President Trump's first term.
Let's talk about what Donald Trump left us. Donald Trump left us the worst unemployment since the Great Depression. Donald Trump left us the worst public health epidemic in a century. Donald Trump left us the worst attack on our democracy since the Civil War. And what we have done is clean up Donald Trump's mess.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history. We were at 21%, but that's being generous because many things are 50, 60, 70, and 80% higher than they were just a few years ago.
Well, Bloomberg's Vonnie Quinn watched the debate closely for us, is staying up late to talk us through what we've been seeing. Joining us from New York, Vonnie, we talk about winning a debate. Was there a clear winner from this head-to-head?
Well, obviously, Tom, both sides will claim that their person won, right? But we have two Wall Street analysts now saying that Kamala Harris clearly won the night. Isaac Boltanski of BTIG and Terry Haynes of Pangea Policy, who basically said that she was the clear debate winner, and he puts her odds of winning the entire election now at 60%. But of course, we know that there's a lot that goes into this recipe, right? Ultimately, this debate was about winning over undecided voters, and particularly those in swing states. We know that the ultimate winner will have to win at least of those Sunbelt, Rust Belt states, 3 out of 7, and possibly a fourth one in order to swing the election. So in terms of all of that, what you want is this to help in terms of fundraising. For it to help in terms of introducing yourself to the voters. And it was really clearly a Kamala Harris night in terms of that. 28% of voters in a Siena New York Times poll said they wanted to know more about the candidate. Well, she definitely gave them more tonight about herself and how she would act as president, if not perhaps policy-wise. I also do want to point out that the Democrats have had a stunning run when it comes to timing. Right after the debate finished, we got a Taylor Swift endorsement, as you well know, and Taylor Swift has 283 million followers. That's almost 100 million more than the entire electorate that voted in the last election.
That is a remarkable statistic, Vonnie. Talk to us. Look, you had a nod to this in terms of policy. Was there anything on substance when it comes to the policy from either candidate? What were the hot button issues of the night then?
So a lot of what we heard tonight we had heard before, right? So we know a lot of Kamala Harris's ideas when it comes to, $6,000 child tax credit, for example, housing help and so on. We didn't get too much new in terms of policy, but we did get more on the hot button issues, as you say, Tom, and it was partially on those issues that Harris tried to bait Donald Trump. In terms of reproductive rights, for example, she, asked him straight out, would he sign a national abortion ban? And he didn't answer that question directly. He said he wouldn't need to, that it wouldn't come to that. Now, that's an issue that resonates with a lot of voters, women voters in particular. We also obviously heard a lot about the economy. We obviously had all sorts of other issues like the border, for example. And that's when Donald Trump also seemed to have a moment where he fell apart. He reiterated this conspiracy theory that's been doing the rounds that migrants in a particular town in Ohio, Springfield, Ohio, were eating people's pets in order to survive. Now, the moderators on ABC News specifically fact-checked him there and said that the town manager had called to say that there hadn't been a single instance reported where a migrant had eaten a pet.
OK, no pet eating. That is some relief then. Vonnie Quinn, thank you very much indeed. Following the twists and turns of the debate, including some of that unusual colour as well. Vonnie, with the analysis, thank you very much indeed. Let's get the market reaction right now. Very pleased to say we're joined by Christina Kino, managing editor of Bloomberg Markets today. Joining us in the studio. Talk to us about the market reaction, Christine. Vonnie talking to us about the fact that two key strategists come out and suggested this was a win for Kamala Harris. Is that how the markets are interpreting this debate?
Well, Tom, markets were very calm and really not a lot of action during the debate, which you could say is a positive for Harris, right? Because that's an indication that investors really saw her debate performance as calming and reassuring. They were looking for indications of details on what her policies are going to be like. They had kind of a bare bones structure, shall we say, going into this debate. And as Vonnie was saying, they were looking for the details because that's where the devil's going to be. And I think they got that. And as a result, there wasn't really a lot of volatility in markets, which, for a lot of investors is a positive thing. And so I think that does indicate that as far as kind of market's verdict on the debate goes, probably handing the win over to Harris. OK,
so the focus then switches, for the markets at least, away from the politics of the US, or it will do at some point later today, to the inflation story of the US as we debate what is more important for Fed officials, the labour market or inflation. What are you bracing for? Is there a risk of volatility around the CPI print of the US later?
I mean, absolutely, Tom. I think the verdict or, the take at the moment in terms of the Fed's stance is, yes, they are seeming to be shifting their focus toward employment as opposed to inflation being a concern. But as a lot of analysts and investors have pointed out over the last few weeks, the inflation dragon really has not been completely slayed, right? There are still signs of services inflation potentially rearing its head again. That's definitely a big worry for a lot of investors here because that is kind of what comprises the bulk of that inflationary impulse in the U.S. economy. And so we could could see potentially a comeback there. And, you know, the fact that the Fed maybe is moving toward starting its rate cut cycle this month in a week or so. A lot of questions over how far and how much they can go if inflation is still very much lingering there, right? A lot of people kind of potentially bracing for a 50 basis point cut in a single meeting, maybe in November, maybe in December. And that really is going to hang in the balance if inflation is still very much an issue, along with signs of a slowing job market.
OK, top line CPI year on year expected to come down to 2.5% for the month of August. We'll see to what extent that adjusts and how that plays into market pricing. Christina Kino with the context, Bloomberg managing editor of Markets Today. Thank you. Let's check in on the Asian markets right now. Avra Hong standing by in Singapore, and another big day for the yen, rallying and putting a lot of pressure on Japanese stocks. Avra.
Yeah, we're seeing those big gains in the Japanese currency to the strongest level versus the greenback since the start of the year. Now, some of this is amid the safe haven demand as the debate got underway. But we are also seeing those domestic factors, right, from the likes of a BOJ board member sounding hawkish, signaling more rate hikes to come if the outlook backs that up. But it's also worth noting here that this is coming against the backdrop of how the debate didn't quite evoke those longer-term fiscal deficit concerns, and indeed that seemed to help those yields, and that also meant the softer dollar. So that is also playing out in what we're seeing in the Chinese currency. Now, in terms of what we're seeing in the offshore yuan, what's really interesting is how it has snapped a 3-session losing streak. And to some, that also reflects that there are lingering or dwindling worries, I should say, about the tariff risk. Because if you look at the PBOC's fix today, for example, it was stronger than the estimates as well as the spot. So maybe to some, that signals that they're not quite worried about a weakening Chinese currency given the tariff risk in the next few months. Let's flip the board, because as you just alluded to, Tom, in terms of the yen, it's really about how the Japanese equities are adjusting to that. And you can see here the bleed is really bad on the Nikkei, on the topics today. We didn't start off the session this bad, but as we came back from the lunch break, it just sank deeper into negative territory. Among the sectors that we are keeping a really close eye on today, Tom, are the energy ones, given how Brent crude is faring. It is the underperforming sector, along with financial related stocks, the Korean ones tracking those declines in their US counterparts. And in the absence of perhaps some key takeaways from the debate for Asia investors, what we are actually seeing is that the dominant recurring themes are actually what we've been hearing about so much recently in terms of the weak Chinese economy, as well as concerns surrounding US economic growth. So this is the picture that you're seeing across the region today. Tom.
Avra Hong standing by in Singapore with a check, of course, on the Asian markets. Avra, thank you for the deep dive. Here's what else to be thinking about today then. On the data front, 7 a.m. UK time, we're going to get a GDP print. This is a monthly print. The survey is looking at 0.2% in terms of the pickup for GDP versus a flat print in the previous month. We will break that for you, 7 a.m. UK time. Here's the big one, though, on the data front, 1:30 p.m. UK time. It is the US CPI print. That inflation number will drop 1:30 p.m. UK time. Forecasts of 2.5%, moderating on a headline basis year on year. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. No surprise that the debate is dominating the coverage. Also, of course, insights on the strength coming through for the Japanese yen, and looking at the banking pressure stateside, with the comments coming through, of course, from the likes of JPMorgan, Bank of America, amongst others, in terms of pressure on margins. Coming up, in another blow to German car makers, BMW says 1.5 million vehicles are to be recalled over fears of faulty brakes. More details on the woes impacting Germany's car market. Plus, Formula One design legend Adrian Newey signs for Aston Martin, representing a huge coup for the team's billionaire owner, Lawrence Stroll. We're going to bring you some of our interviews with both of them next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Now, German car makers sinking deeper into a crisis, undermining the future of the country's most important industry. Let's go to Bloomberg's Oliver Crook standing by for us in Berlin, who, of course, has been charting this all for us. Ollie, give us the latest in terms of the woes of BMW and VW. This is coming in quick succession, two companies with two different sets of issues.
Yeah, Tom, I mean, if you needed any more bad news from the German auto sector, you got it yesterday. For BMW, it's a recall of 1.5 million cars. That is down to do with brakes, the issues around the brakes that have been furnished by Continental. But what it has done is sort of for the broader term, obviously there's big questions on the macro and demand in China, demand in Europe, demand in the auto sector in general, but it has meant that BMW is going to cut their margins. They're now aiming for 6 to 7%. Before it was 8 to 10%. And for this car maker, and really for all car makers, but particularly for sort of a higher end car maker, the luxury car makers, generally speaking, that margin is absolutely crucial. In terms of Volkswagen, what they have done is after they said that they're maybe closing factories last week, they have said yesterday that they're going to terminate worker protections that they've had for 30 years, Tom. Huge worker protections. This would protect jobs into 2029. That now is going to change. They're dissolving that. That means that these jobs are no longer safe, starting basically at the midpoint of next year. And it basically sets up this huge union fight for Volkswagen. And part of the reason they've never done this in the past is that half of the board seats are held by worker representatives of some kind. The state of Lower Saxony owns 20% of the company, so obviously is not in favor, generally speaking, of job cuts. So this is a very tough fight, and it just comes to show how difficult things are for Volkswagen right now, and that they're willing to undertake this fight. When you look at the market reaction and what happened yesterday in the session, I mean, all of the car makers in Germany got absolutely crushed yesterday. We saw Volkswagen down 3%, almost 4%, BMW 11%, Continental about 10%. And we should say on Volkswagen, right, the price of the shares there, it has gone from the biggest car maker in the world, the most substantial, to being worth about 6% of Tesla's market cap.
Wow, 6% of Tesla's market cap. And look, you nodded to this, the capacity issue, and this is clearly something that VW are trying to address with those planned factory closures, or at least those warned of factory closures. They are not producing up to their capacity. There's a gap there. How big is that gap, Ollie?
Absolutely. I mean, we have a great sort of data journalism piece that we put out on the terminal today, and it looks at basically this issue of undercapacity. So basically, a third of major plants in Europe are producing less than 50% of their capacity last year, right? That is in part because sales are still way below their pre-pandemic level. They're 3 million cars below the pre-pandemic level. And when you think about kind of what the contribution of all this stuff is to the European economy and to GDP, I mean, it's 7%, the auto sector, of the European economy. It's 8% of all manufacturing jobs within Europe. It's 13 million jobs. And when you look at the breakdown of who's kind of most affected by country in terms of the full manufacturing share, so this is all manufacturing share, what percentage of it belongs to the auto sector for the EU countries? Slovakia, Romania, Sweden, they're all about 14% or more of all their manufacturing jobs are within the auto sector. You go here to Germany, and this is a major economy in Europe, that's still 11% of all manufacturing jobs within Germany. In the EU, it's about 8% on average. But again, when you think about kind of the future of this industry, which is really facing all of this upheaval and starting to potentially cut jobs across the board, this is going to have a major impact, yes, on the economy, but also on jobs.
OK, Oliver Crook with a smart breakdown of some of the multitude of challenges facing these German automakers. Ollie, thank you. So for the mass market automakers to Formula One, and Aston Martin Formula One has signed star designer Adrian Newey in a move that billionaire owner Lawrence Stroll hopes will turn it into a championship contender. Newey is regarded as the greatest F1 designer, helping win titles at Williams, McLaren, and most recently, of course, Red Bull. Newey spoke to Bloomberg after Aston Martin revealed the deal, which includes him making him a shareholder in the team.
Lawrence is very realistic. He knows that that's a big ask. It's Formula One is incredibly competitive. It's very difficult to do that as quickly as that. 26, I think everybody concentrates on it because obviously it's an opportunity in terms of the big regulation change, but it's also quite soon for a team that's still kind of establishing itself.
Getting Adrian to join again as a partner is a great coup. He was wanted by many other teams. I think it was all over the news. Everybody knows which teams they were. There's not a team in Formula One that won Adrian. So I think this is a revolutionary moment for us, transitional moment for our company to get Adrian to join.
That was Aston Martin F1 team owner Lawrence Stroll and Adrian Newey, the team's incoming managing technical partner, speaking to Bloomberg. Coming up, bank stocks tumble as JPMorgan leads the sector in pushing back its outlook. We take a closer look at the banking sector next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, JPMorgan shares fell the most in more than 4 years after the bank said analysts are being too optimistic on next year's expenses and, crucially, of course, net interest income. Let's get the details then from Bloomberg opening trade anchor Kriti Gupta. Kriti, what have you been hearing from JPMorgan and others in terms of their concerns about maybe some softness in terms of NII?
Well, we know that so much of the gains and the outperformance, especially in the loan market, has been driven by extremely high interest rates. These banks have been minting money, and even in their trading sector, doing it through a lot of the volatility in the markets as well, in the absence of a lot of this deal-making activity, this IPO glut that we're seeing. So this has actually been their kind of Hail Mary in a lot of ways. But when you look at a market that's pricing in something like anywhere from 6 to 7 on the high end of rate cuts for the next 12 months, this is a big deal because it eats into their bottom line. And that's the kind of, I think, hint that you got from Daniel Pinto at this banking conference yesterday, the president, of course, over at JPMorgan. It's also a big deal because it shows up in Europe as well. This is something we've had a conversation with in terms of the tailwinds that we see in the likes of Italian banks, German banks as well, that so much of that net interest margin that showed up and was, again, driving so much of their outperformance, driving in return also more buybacks as well by European banks, a record amount. That might all go away if you start to have a global easing cycle.
OK, so getting the warnings coming through thick and fast, JPMorgan, Bank of America, Goldman Sachs on this front. And as you say, European lenders are not going to be unaffected. And we look ahead to the ECB decision, of course, later this week. The expected move lower once again, second cut expected, of course, from the ECB. Talk to us about deal making in this space. UniCredit making an investment in Commerzbank. How much of a vote of confidence in the German lender is this?
So this is a long kind of tale in terms of Andrea Orchel, the head of UniCredit, has always had his eye on Commerzbank. There were reports by Bloomberg itself that suggested that it looked like they had their eye on some sort of takeover offer. But it was never a formal bid. It was never perfectly clear. Now, this time, UniCredit is talking about buying a 4.5% stake, the exact amount that the German government is selling. So that's the kind of first step for Commerzbank to get their hands on UniCredit. This still also makes them a third shareholder after, of course, Germany and BlackRock as well.
OK, Bloomberg opening trade anchor Kriti Gupta on the impacts around the banking space, a story we will continue to monitor for you, of course. Another big story for us today, beyond the banking sector and beyond, of course, US politics, is what's happening with the Japanese yen and the strength that's coming through then for the currency of Japan. Currently trading at 140.75, up 1.2%. We continue to get lines through from BOJ officials. The most recent lines, earlier this morning, we heard lines from a BOJ official suggesting that further hikes were in the cards. That meeting from the BOJ, of course, on Friday. Lines crossing just in the last couple of minutes from a BOJ official. And this is Nakagawa saying that the weak yen impact on costs is not 100% reflected in prices. Where it is reflected, though, and this is me, of course, pointing this out, is on the Japanese stock market, where the Nikkei is under significant pressure in the session, down 2.4%. Strong yen not helping Japanese stocks at this point. 140.77 on the Japanese yen. We'll keep across this story for you. Kamala Harris puts Donald Trump on the defensive over abortion and foreign policy, while the former president attacks Harris on the economy and immigration. We are live in the US with a deep dive on the debate. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Donald Trump and Kamala Harris clash in their first ever debate, with Harris securing a surprise endorsement from Taylor Swift. The presidential showdown dominated by the economy, abortion rights, immigration, and the January 6th riots. US and European futures pointing lower this morning as traders weigh the presidential debate and growth concerns ahead of a key US CPI report due later today. Plus, JPMorgan shares tumble after it pushes back on earnings optimism, while rival Bank of America warns of weak investment banking performance. We bring you the latest from a nervous banking sector, and it is risk off across these markets. Actually a pretty decent session yesterday on Wall Street despite the concerns around the banking sector. And yes, you saw JPMorgan tumbling 5%, but there's the upside coming through from the tech names, notably Tesla with an upgrade coming through that lifted US stocks by the end of the close. Today it's a different picture. Risk off, the politics of the US and inflation data, of course, in focus. European futures pointing lower by 0.1%. The FTSE 100 here in the UK looking at losses of 23 points as things stand. S&P futures pointing lower by 0.6%, and you're set for a pretty challenging day in terms of the Nasdaq 100, currently pointing lower by 148 points. Let's flip the board and look cross-asset. Worth mentioning that there was an auction of 3-year notes by the US Treasury yesterday, well absorbed by the markets. They have a 10-year auction later today. 356 on the front end, yields down 3 basis points. Again, could be volatile around that inflation story of the US, dropping 1:30 p.m. UK time. 140 on the Japanese yen, strength for the Japanese currency, up 1% in the session, weighing on Japanese stocks as BOJ officials suggest that further hikes are in the cards. Below $70 a barrel for the first time in 2 years on Brent, but up 0.6% so far in the session. And Bitcoin, that asset was moving and weaker on market views that Kamala Harris won that debate. Bitcoin expected to be gaining if Trump wins in November, currently down 2.4%. Breaking news right now, redhead across the terminal. This is in the retail space. Inditex, the owner of Zara, of course, the retailer, the clothing retailer, first half EBITDA, so earnings before interest and tax, coming in above the estimates. It's a beat in terms of first half earnings for Inditex, 3.54 billion euros. The estimates had been for 3.48 billion. On the margin story, also a beat coming through for this business in the first half, 19.6%. The estimates had been for 19.4%. So a check there on the earnings numbers coming through for the owner of Zara. We'll get more on that story later this hour. Back to the politics of the US right now, and of course that presidential debate. Republican Donald Trump and Democrat Kamala Harris sparred for more than 90 minutes in a head-to-head matchup last night that ended with prediction markets showing positive signs for the vice president. The two battled on issues ranging from abortion to Afghanistan, just as early voting is set to get underway in the first states. For more, we're joined from New York by Bloomberg's Vonnie Quinn, who's been monitoring all of this for us. Vonnie, talk to us about where both candidates stand on the back of this debate. Was there a clear winner eventually?
Well, I think the consensus is forming around the fact that Kamala Harris won the debate. We have Terry Haynes of Pangea Policy and also Isaac Botansky of BTIG, both Wall Street political analysts, saying that Harris clearly won. Now, that doesn't mean that she's going to win the election or anything like that. Polls are still very much neck and neck. She will have to transfer some undecided voters. And this election is going to be won by potentially, 10 or tens of thousands of votes. And again, as I say, polls right now are very close. So what did she want to accomplish out of this? Well, she certainly wanted to take control of the narrative once more, keep that momentum going that the Democrats had out of the DNC. To that end, she did bait Donald Trump in several areas, including the size of his rallies, which, made him a little angry and incurred his wrath and had him asking for a second debate in the spin room at the end, where you never see candidates. But perhaps one of the more important things that came out of this debate was post-debate, when just a few minutes later, Taylor Swift on Instagram posted her endorsement of Kamala Harris. She said, "I'm voting for Kamala Harris because she fights for the rights and causes I believe need a warrior to champion them." It already, Tom, in less than 3 hours has 4.5 million likes and 100 million forwards. And we all know the absolute momentum that Taylor Swift fans can have. So the Democrats will certainly want to keep some of that going into the next 55 days before the election day.
OK, Vonnie Quinn with the take, of course, on the debate, the endorsement as well, as she said, from Taylor Swift, who, of course, we have been focused on when it comes to inflation. Now, we may have to weave her into the political discussion on a more regular basis, see if that moves the dial. Let's get more reaction right now to the debate and bring in Josephine Harmon, Assistant Professor of Political Science at Northeastern University. Of course, Josephine, thank you very much for joining us in the studio. What is your take on the back of this debate? Did it move the dial for either candidate? The betting markets suggesting that Kamala Harris won. Is that your view?
I think in terms of the substance, that's probably right. She probably did win in terms of the issues. I think the issue for Kamala Harris is going in, there was a lot of hype about her performance, the sense that she would be a great debater, she was an experienced lawyer. I think paradoxically she may have lost some of that mystique coming out of this debate. And, Trump is a very difficult person to deal with. It's like trying to nail a jelly to a wall. And there were a few moments where I think she was a bit startled, a bit off guard. But overall, I think she showed the American people who she was. She presented a policy agenda, albeit a bit vague. So she got some of those objectives achieved, I think, from this debate.
When it comes down to it, this is all about undecided voters in a handful of swing states, possibly 5 swing states.
Yep.
How consequential is this debate for those voters?
It's hard to say, really. It's hard to know how undecided voters will view Harris. We know that about 93% of Republican voters are still going with Trump. And so this is going to come down to, as you say, getting out the youth vote. So, Taylor Swift could be important with that, and convincing undecided voters. I think so much of the unknown with this debate is, how will voters remember the Trump term? Will they consider themselves having been better off in that term economically, perhaps? Biden's certainly seen, high inflation, high CPI, or are they willing to go with somebody new? Harris was very insistent, trying to emphasize this idea that we need to turn a page. We don't want to do this old thing, which is Donald Trump. We need to try something new. And we'll have to wait and see whether voters agree with her on that.
And in polls, the economy consistently comes up as the top concern for voters, and Trump is seen as a better handler of the economy in those polls. What do we know about the policy from both candidates? Has anything been fleshed out in this debate on policy?
I don't think very much was fleshed out on economic policy, to be honest with you. Harris opened with a gambit, her first question, talking about housing, saying that she had a plan for the economy. That's all very well, but she didn't really give detail on that plan. And whether that's picked up by voters is an unknown. But I don't think we've learnt very much more about where Harris stands on policy, which was the big criticism going in. We just know what her opposition is to Donald Trump. So it's hard to know how the dial will be moved by this debate alone on that.
Trump attacked Kamala Harris over Afghanistan and the withdrawal there. Kamala Harris attacked Trump over China, over Ukraine, Russia. On foreign policy, where are the clearest dividing lines?
Well, I think the clear dividing line we can notice is that of the Ukraine war. And Trump's historically friendly relationship with Vladimir Putin, which he's always depicted as a positive, that it makes him a strong candidate, the fact that he has this kind of trust from the Russian president. It hasn't so far seemed to have hurt him with voters back in 2016. Perhaps it did in 2020. I think where Harris was trying to signal her position was clearly on the Gaza war in Israel, trying to play both sides, really trying to sort of take a quite fairly moderate down-the-line route. So I think certainly Ukraine, the Gaza conflict, those will be 2 major issues. I think we'll be hearing a lot more about Donald Trump's relationship with Vladimir Putin and with Russia in the next few weeks going forward.
Oh, look, we touched on Taylor Swift and the endorsement that came in shortly after this debate. Does Taylor Swift, she has 238 million followers on Instagram and other platforms, of course, adding to that number. Does she move the dial on this?
She could very well move the dial when it comes to getting out the youth vote. Now, this is where Clinton famously lost, in part in 2016. She couldn't convince enough young voters, including young women, that she was the candidate for them. So far, Kamala Harris has had a brat summer. She's clearly done well on Twitter. She's been very aware of that imaging and the positivity of that. She's absorbed that into her campaign. And so, if Taylor Swift helps raise awareness amongst youth voters that an election is coming, turn out for that election, it could very well help her with an important demographic, for sure.
OK, great analysis on the back of this crucial debate, of course, for the 2 presidential candidates. Josephine Harmon, Assistant Professor of Political Science at Northeastern University. Coming up, fintech Revolut is grappling with a rise in online scams that are threatening its growth ambitions. We have all the details on that priority story. That is next. This is Bloomberg. Welcome back now. Zara owner Inditex has reported first half earnings ahead of estimates. Our next guest says we are now firmly in the golden period of the year for retailers in the run-up to Christmas. Yes, we are already there. Joining me now is Erin Brookes, Managing Director at Alvarez and Marsal. Erin, we'll start with the Inditex numbers then. Of course, the parent company of Zara coming in better than expected. The analysts had expected a pretty decent set of numbers. They were focused on the outlook as well. But given all the constraints around supply chains, around inflation, around a consumer that is feeling a little bit more pressure, maybe a bit of a silver lining in the retail space. What do you take from the earnings, from the numbers that have come through from Inditex, and whether or not there's a broader read across to the wider sector?
It's interesting. Zara have had a fantastic quarter, and the signs are for the quarter coming that, early signs are that they're expecting to be, also very strong. I think what this tells us is really about Inditex as a whole and as an operation. It is, amazing at sensing demand, at understanding the consumer, at predicting, what fashion is really going to fly off the shelves. And I think that Inditex will continue to be an outperformer, especially against a backdrop of H&M, which has not performed as well in the last quarter. So I don't think the read across is quite right that, we can expect everyone to do well. Primark, for example, has really suffered in the last quarter due to weather. Adverse weather has been an issue for many clothing retailers, but this for me reinforces how strong Inditex is as an operator.
Okay, that's very interesting. So this is more of an idiosyncratic Inditex story than a broader sector story.
I think so.
Talk to us about the consumer then. We're seeing details and data out of the US in terms of credit card delinquencies, auto loan delinquencies, credit card borrowing going up. That's happening in the US, suggestions that some of that is happening in Europe as well. What is the resilience of the consumer at this point? How much weakness or how much of a challenge, how conservative is the consumer in this environment?
So consumer confidence is still very low. There have been recent reports that it's improving, but it's still at a negative number and just sort of starting to creep back up. What we know is that the consumer is really concerned about energy prices. They're concerned about the grocery shop. This is in the UK. And what that means is that discretionary spending remains under pressure. We've also seen some research recently to suggest that, the big items of expenditure like furniture, electricals, consumers are holding back because of lack of certainty around their own economic prospects and their feeling of confidence.
And the data suggests that grocery prices are coming down and that there has been a marked impact there. Talk to us then about how the supermarkets are adjusting to environment. They've had to wrestle, of course, in the last couple of years with inflation. Now they're looking at a deflationary environment. How do you foresee supermarkets adjusting to that new reality?
Yeah, so grocery price inflation has come down, although still not by very much. It was 1.8% last month, and now it's 1.7%, but this is still significant. And what we saw last month is that volumes have crept up around 3%, so the consumer is responding. But the behavior of the consumer is really interesting, really buying into deals and promotions. We're seeing market share variation. Of course, you've got some real stability across Tesco and Sainsbury's, some fantastic results from Lidl and Aldi, and of course, Asda's been softening a little bit. And I think what we can see is that the consumer, remains a little bit promiscuous. Will shop around, and the businesses that really understand where their consumer is and can stimulate that demand, those are the ones that will be more successful.
Okay, so loyalty is being shredded in this environment. Talk to us about the holiday season. My goodness, September the 11th, we're already talking about the holiday season. How are retailers gearing up for this? It's always, of course, a massive moment in the year for retailers. How are they looking to cash in on this moment?
It's interesting because I think in the last few years, everyone's been planning Christmas, of course, way before September. And September for the last few years has been warm. At the moment, the weather here in the UK is actually a real blessing for apparel retailers as they start to trade into their autumn-winter ranges. So, the weather being, dreadful will stimulate demand, which is wonderful, and sets retailers up with confidence as they move towards the Christmas period. I think the watch out will be around Black Friday. We've trained consumers to wait until Black Friday offers come through, and then we see, of course, big spikes. But it's going to be a critical trading period because the year has been challenging.
So how much scope do they have then, the retailers, to push through further discounts, given the margin pressure?
Well, I think the thing is, once you've bought all the merchandise and invested in stock, if it's not selling through at the rate that you plan, you have to mark down and you have to promote in Black Friday to clear through that and realize your cash conversion. So, I think some of them will be better positioned than others, but it's going to be a challenging season, I think. And this season, as you know, is so completely critical for retailer profit. it remains to be seen what that's going to look like.
Okay, what else are you watching for? I mean, we're in an environment where as you've said, the consumer, you described the consumer as being promiscuous, interest rates expected to come down. You've given us a good deep dive on this. We've actually run out of time, but there was really smart analysis in terms of where the consumer was. We're just deciding whether we had time for another question because the content that you're giving us and the analysis is really valuable. So thank you indeed. But in fact, we've run out of time. Erin, Brookes, Alvarez, Marsal, we're going to get you back on again as we count down to that holiday season, of course, with a touch on the retail space and the consumer here in the UK. Now to some other stories making the news this Wednesday. Rightmove has rejected a $7.3 billion takeover proposal from Australian real estate listing provider REA. The company, part of media mogul Rupert Murdoch's empire, made a prelim cash and stock proposal for the UK property portal. The offer is at a 27% premium to Rightmove's share price on August the 30th. Amazon says it will spend over $10 billion in the UK to grow its cloud business, adding to a string of recent expansion moves in Europe. The UK's Treasury says the 5-year investment in data centres will support up to 14,000 jobs and contribute over $18 billion to the economy by 2028. Now, Revolut is battling against a rise in fraud complaints that are threatening the fintech firm's growth ambitions. The challenger bank says it is fully committed to tackling online scams. Bloomberg's fintech reporter Aisha Ghani has been speaking to victims who have lost money to some of those scams. Joining me now as well with the details. Aisha, this is a fascinating read, well worth checking out on the terminal and, of course, on Bloomberg.com. The challenges around scams and Revolut's response to that. How many people have been affected?
That's right, Tom. Well, we don't know the exact figures of the number of people who've been impacted, but we know that claims against Revolut have been stacking up at the financial ombudsman service.
OK, and those numbers are standing out. And Revolut seems to be standing out in terms of the claims that they're coming through for that company. And we know it's seen rapid growth, the most valuable European startup at this point. What are the complaints levelled at Revolut at this point?
People are saying that they're getting scammed, they're losing thousands in money, often their savings, often money that they've stacked away for other things. And they're complaining that when they make a complaint to Revolut, it doesn't get through or it's pushed back, and then they have to go to the financial ombudsman service for their claim to be heard. They're not getting refunds because Revolut doesn't need to refund customers at the moment.
At the moment? Does that change? What has Revolut's response been to these claims? And what do we expect to change, if anything, on the regulatory front to try and clamp down on this?
So when I put these cases to Revolut, they apologised. And, of course, these are still ongoing investigations at the Financial Ombudsman Service. But they did say that they've been investing heavily into their FinCrime team. They've got 4,000-strong team at the moment. They're investing heavily into AI to spot some of these anomalous payments. And also they've introduced things like biometric authorizations on your phone and multiple checks in order to warn customers, are you sure you want to make this payment? Now, the second part of this is by October the 7th, the rules are going to change in the UK where all banks will be liable for covering fraud claims, and it will be split 50-50 between the sending and the receiving bank, whereas previously the onus was on the sending bank. Now banks like Revolut and many other smaller firms are liable for more receiving payments of scams.
OK, Aisha Ghani, thank you very much indeed. We'll look to that date then and the rule changes, see how that impacts the sector. Really important read on the terminal right now around the scam challenges focused on Revolut and the broader sector as well. There is plenty more coming up. We look at markets right now. European futures currently lower by just 0.1%. A bit of caution in these markets. US futures pointing to a tougher, challenging session stateside. We have the US politics to contend with, but also, of course, the inflation data out of the States later today. CPI in focus. ES&P E-minis, US futures pointing lower by 0.5%. Here in the UK, FTSE 100 futures pointing lower by 0.2%. The yen is rallying. Japanese equities under pressure. And, of course, we continue to focus on treasuries and the movements there, given the pricing around the Fed and to what extent the inflation data adjusts that. Yields down at the front end so far in the session. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Some breaking news right now in the banking space of Europe. UniCredit said to now own 9% of Commerzbank after buying a 4.5% stake from the German government in that German lender. So that's the headline in terms of some deal making between UniCredit and Commerzbank. UniCredit now owning 9% of Commerzbank after buying that stake. That's an evolving story. We'll keep across all of that for you with the details and the context through the next few hours. Let's get back to the election odds, though, on the back, of course, of the Trump-Harris debate. And on PredictIt, the betting platform for these markets, you are seeing a win coming through for Kamala Harris. Expectations in terms of the odds for Kamala Harris winning November moving to 56%, 48%, so moving lower for Trump. Ahead of this debate, they were effectively even. The odds now have diverged, as you can see, in favour of Kamala Harris. Worth pointing out that the polls leading up to the debate has suggested, the national polls, the one that came through from the New York Times, suggesting that both candidates were very, very closely, evenly matched. So we'll see how the polling adjusts on the back, of course, of the debate, and we'll continue to keep across the market reaction to that. Now, there's been a massive spike in donations as well for Kamala Harris, the candidate, just shortly after this debate. So the coffers of the Democratic campaign being bolstered once again. They do have that advantage already, and that's been built on again in terms of the finances and the flows of money and donations to the Democratic campaign. Let's move on to the inflation data out of the US. That's a focus after the US politics. Expected on a headline basis to move from 2.9% to 2.5% year on year for the month of August. But here's what's fascinating, and this is what the white line shows on a 3-month basis if you combine it and then push it out for the rest of the year. So if this is the kind of picture, if the first 3 months of the year is the kind of picture you get throughout this year, so on an annualized basis, you are actually looking at inflation of below 0.5% on a headline basis when it comes to CPI. So clearly well below the Fed's target of 2% because, of course, inflation and CPI actually contracted in June. So again, this is on an annualized basis, suggesting the Fed is on track towards that 2% target. There's plenty more coming up on Bloomberg TV, including an interview with Andrea Illy, the chairman of the coffee company. But the opening trade is next.